Okay, good afternoon, everybody. Good afternoon. Welcome to the Paul's Monday Market Update number 201 for Monday, 27th of October, 2025. I hope you're well. I hope you have enjoyed a good start to the week. I appreciate that it is, I think it's half term for many kids. So hopefully that's I'm just working with that. I'm just looking at clearly there's a bit of a delay there, and we're trying to stream this through the sort of YouTube channel. So if you just bear with us a moment, we'll get this tech sorted. Hopefully that resolves any tech issues. As I said, this is Paul's Monday Market Update number 201 for Monday, 27th of October, 2025. I hope you're all well. I hope you've had a good weekend. Hope you're ready for a good start to the week. It is a rather big week. There's an awful lot going on this week, but more of that later. Hopefully you can all hear my voice, or you can see the slides, whether you're here in the Zoom or whether you're watching this on the YouTube channel. For those of you joining us for the first time, the Monday Market Update is just that. It is me flying through as much as I can share with you in the next 30 minutes, looking at strength and weakness within FX markets and indices and commodities markets, looking at a few charts of interest, and then finishing off with a look at the live markets. It's not a signal service, it's not trade recommendations, it's just me sharing what I'm interested in and what I'm looking at, and that might be relevant or helpful to yourselves. As always, you're always very welcome here, and questions are always welcome, but just remember that you are always responsible for your own trading decisions. And if you want a bit more education, I'll be running the Active Trades Monday Market Matters webinar at 2 o'clock this afternoon. The education element will all be about trading news events. So if you want to join us, you're very welcome to. You can either use the QR code there or register on the Active Trades website. And if you need a little bit more help and support for your own trading, then you are very welcome to look at joining the BTP Trader Accountability Group. The whole idea being to help you build discipline, accountability, and consistency in your trading. You can ping me or look at the QR code if you've got any questions. Okay, let's dig into the main element of today. Okay, the start. So I appreciate if you're new to trading or new to joining us, this might maybe look a little bit overwhelming or intimidating, but it's pretty easy to understand once you get the hang of it. It is just some clips from my own weekend analysis that I do, where I'm looking to utilize my own model, the STAM, to identify where's the strength and where's the weakness within FX markets, but also indices and commodities markets. So what is this telling us, and how can we utilize that to help us? So we are into week 44 of the year. Where's the strength? Where's the weakness? Well, Swiss franc remains top of the pile there, with euro tucked in on second place. Okay, so there we've got it at the top, but as you can see, that has been pretty much the sort of the same case for the majority of the last few months. On the other end of the pile, where's the weakness? Well, what we see is Japanese yen has kind of fallen to the bottom of that pile, and Kiwi dollar remains, for the most part, weak there. Now, interestingly, a lot of that is Japan is basically is the sort of response to kind of, I would suggest, to kind of US and China tariffs and trade wars, as everybody else, but also, of course, the new incumbent prime minister and her policy and her relationship with the US. And so we have seen yen sliding away. Okay, hence why it's at the bottom of the STAM, but that has also had a knock-on impact to the Nikkei, and the Nikkei has traded its way through 50,000. Okay, over the last 24 hours or so. So we will look at that in more detail in a moment. Looking a bit closer to home, sterling continues to sort of roll over and fall away there. Okay, we've dropped to number 5. Okay, it's in the middle of the pack. That is pretty much sort of confirmed, as I've said for the last couple of weeks. When I look at the individual currencies here, it's a very mixed picture, okay, for sterling currencies in terms of some are in selling environments, some are in buying environments. Okay, that in itself just basically gives me an indication of the impact on sterling or where it sits. And invariably, we are now is about a month to the budget, and my own personal view is that we will knock about in the sterling a bit. Okay, everybody's just basically waiting to see how badly we're going to get stiffed by Reeves and Starmer, and so invariably that is going to hang over the sterling for the next month, I'd say. What we have there is that US dollar has been holding also middle of the pack. Aussie's had a little bit of a bump, which has basically followed through. Okay, this is sort of for the last 12, 24 hours. As you can see there, Aussie, Kiwi, sterling have all had a good start to the week. That is very much an indication of the risk on tone. That is very much an indication of the let's say the happiness that markets have with the fact that it looks like there is a framework agreed for the sort of US-China trade talks, which means that there will be a meeting going ahead between Trump and Xi. And so, of course, everybody's got a little bit giddy. Everyone's got a little bit excited. And when we switch across to the live markets, you'll see the sort of the view on that because of the way it's driven markets. Overall, this is it's not only just that let's say that sort of geopolitical element that, it is a very busy week this week anyway. It's definitely the week of the central bank speakers. So the big one, the main one, of course, will be the FOMC on Wednesday evening, or Wednesday evening for those of us here in the UK. It's pretty much everybody's baked in a 0.25% interest rate cut there, 25 basis point cut by the Fed on Fed on Wednesday. Earlier in the day, there'll also be the Bank of Canada. They've got their rate statement, and once again, they're expected to cut by sort of a 0.25%, 25 basis points. Then on Thursday, you've got the Bank of Japan policy. Nobody's expecting any particular moves from them, but people will be interested to hear what they actually have to say in terms of the press conference. And also on Thursday, we have the ECB. They have their rate meeting as well, and also their press conference. And once again, we're not expecting any change, but it will be about what they actually say in the press conference. As well as that, we've got Aussie inflation numbers, okay, sort of coming into sort of Tuesday night, Wednesday morning, and some Canadian day GDP on Friday. Remembering that there is a bit of US data, but of course the federal government's still on shutdown. I got my call last week wrong. I thought it had been the longest government shutdown. It turns out it's only been the second longest. So I appreciate some people get excited about that kind of data and stuff. So nonetheless, it has an impact on overall market confidence, and it also has a confidence in the US and the government, but also an impact in terms of when data does come out. Basically, traders, investors are ready to sort of jump upon it. We also have a huge spree of earnings numbers coming out this week. It's a really full-on week in terms of quantity and quality, and we'll look a bit more of them in a couple of minutes, and one or two of them that are who've got their earnings this week. But it is going to be a major week. So you've got all of that you've got Trump saying his thing. You've got the kind of US-China trade talks, all right. You've got earnings report. You've got central bankers speaking. As I said, it is going to be a very busy week. So make sure that you're on top of the news flow. Make sure your analysis on top of the order flow, and as always, make sure that you are managing risk accordingly. So let's have a little look at a few charts of interest. These are just charts invariably of equities or ETFs or commodities that are of interest that we might want to take a note of, keep on our watch list. This is Meta. Okay, for a certain generation, this will always be Facebook. This is the weekly chart. Why am I interested in? Was they're saying this? So of course, Meta, they've got their earnings this week. I think it's Wednesdays after they close. I think that's what I off the top of my head. I think that's what we're interested there. But what I'm kind of looking at here in terms of is what's the price action telling me at the moment? Is there anything that I can look at? And what I'm kind of curious about is that what we're seeing here is, to me, that is a weekly double top there, okay, at the sort of big round number of $800. All right, we've already sort of drifted beneath the 20 period moving average, and now we're pulling back up into it in front of those numbers. Yeah, and it is Wednesday after close. So my question is, well, okay, is that double top at 800 an indication, all right, that the price is going to roll over, or is it likely that Meta will get caught up in the kind of let's say the post US China sort of tariff tension giddiness that has basically fallen its way into driven its way into markets. If I'm honest, my view is probably the latter. That I think that the kind of the giddiness of this week will basically push most things higher, especially if the numbers are good. And so I'll be watching this. Okay, this is the weekly 20 period moving average there, that blue there. And I'm going to be watching to see. Does it, okay, we've already got a gap up on the open, that's the giddiness. Does it manage to stay above there, okay? Or does that 20 period moving average act as kind of dynamic resistance? And if Meta's numbers are poor, then does that basically drift its way back down to the 50 at around about $675? That would be my bearish. You're kind of looking after the sort of the double top there at 800. If I'm just looking at this price action wise, okay, then that's what my view would be. But you have to understand context. I say this all the time: CPT, context, pattern, trigger, and the context is that there's going to be a relief rally off the back of the kind of US and China getting themselves sorted. And that kind of giddiness will I think will sort of lift markets higher anyway. So I'll be watching this to see how it plays out, see what the numbers are like. But if you're going to force me, even though the price action looks great for a rollover, I think the overall context pulls markets higher this week. Another one that is reporting after the close on Wednesday is Microsoft, and I was kind of intrigued a little bit about this as well. Okay, from the let's say the tariff tantrums, all right, earlier on this year, Microsoft had quite some run on it there, didn't it? Really just actually fired its way all to new time highs, putting this kind of, real big reversal, there's a pin bar, hammer, then a couple of really nice inside bar pin bars, and then we drifted our way lower. The way I look at this now, I'm going to draw this out, is once again, I see this as a bit of a kind of a lazy double top here, okay? A bit of a lazy double top. Now, those of you who follow the Togs Trading podcast, hopefully you saw that we released a bonus session at the weekend about double tops and double bottoms. So if you are interested, by all means, you can look at that on the YouTube channel, right? Togs Trading podcast, just, bonus session, double top, double bottoms. And that's what I see. I see this as a bit of a lazy double top here at the moment, okay? But once again, a bit like what we just talked about in Meta, the way I'm looking at this is that, we're sat above $500. We are also sat above that 20 period moving average. And also, last week we kind of had a bit of bullish. And then if you look at the pre-market, is a bit of a gap up on it as well. So as I said, if I was looking at the price action there, I'd be kind of curious to see, well, could the numbers on Wednesday be really poor? If they were poor, would that be enough to basically, drop us south of $500? That's what I'll be looking at as a reversal pattern. But once again, you have to understand the context. And as I said earlier, I think the giddiness, all right, the giddiness that will basically overwhelm markets at the moment is what will lift markets higher, especially if Microsoft print good numbers as well. So even though the price action there is a nice bearish reversal, my sentiment is to the bullish side. Okay, at the moment, that's what I'll be looking at to see how that particularly plays out. And then finally, before we switch to the live markets, this is something a little bit different. This is BYND, Beyond Meat. If you don't know what they are, Beyond Meat is as the name implies, they basically they create burgers out of processed peas. All right, there was no meat involved. Now these launched a fine affair. All right, okay, and they were much lauded It's 5, 6 years ago. It's before the I think it was before COVID, wasn't it? And I think they opened high and they rallied stupidly high. I think it might have been to about $250, etc. But then what happened was that people went out and tasted them, and the share price has never looked up since. And I have my own particular story when it comes to Beyond Meat. This was here. This is kind of March 2022. I inadvertently found myself on a date in a vegan restaurant with a vegetarian girl, and even the wine was vegan. I tried once, never again. And basically, the only thing I could try was a Beyond Meat burger. It was so woeful, and I was so disappointed in it that on the Monday I went in and shorted. I went long the girl and shorted Beyond Meat. It was a good pairs trade. I shorted it around about $50, and I got out around about $22, $23, thinking that I was fantastic. But actually, you can see that literally it drifted its way much, 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 much lower. And I think it sort of kind of peaked out there kind of about a week or two ago, it was about 65, 70 cents. Right. What you can probably see is that we actually had a real bounce there. Okay. There's a real boom. There's a real sort of, there's a real maneuver going on there now. Whether that is just internal politics and the shenanigans there, okay, or whether whether it is like Phoenix from the Flames, just about to get itself a second life as some sort of meme stock, okay, and get the meme stock crowd behind it. We shall wait and see. But something is happening there, okay. It might just be maybe it's just the sort of the last throes of a dying animal. And I'm aware of the irony of that comment when we're talking about Beyond Meat, but nonetheless, there is something going on there, and you might want to just watch and see how that particularly plays out over the next couple of weeks. But my view is trade the instrument, don't eat the product. It's pretty woeful. Anyway, so there you go. All right, just a few charts of interest that you can add to your watch list. Let us switch across to the live markets and see what's going on there. And so just bear with me for a moment. Just going to switch across for a moment, and let's look at what's going on in the live markets. So here we have some charts up. Okay, so this is one of my indices profiles. Okay, hopefully you can still hear me. Hopefully you can see me or see the charts rather. So I've got Dow on the weekly, Nasdaq on the weekly, S&P 500 on the weekly, Russell on the weekly, DAX on the weekly, Nikkei on the weekly, FTSE on the weekly, and then oil West Texas on the weekly. We had drifted low on oil, but we kind of bounced our way back ourselves up above there. Okay, up above 60 there. We'll wait and see about that. Okay, I've got my own comments and thoughts about that. As I said earlier, the changes in the sort of Japanese Prime Minister has just driven Nikkei to highs. We're up there above 50,000 there. That's just, look at that. Over these last few months, that has been quite some run. And of course, that has been helped by the sort of the weakness in the Japanese yen. But interestingly, that has happened despite the kind of let's say the ongoing conversation between Trump and the Japanese, okay, about the shape of their relationship going forward. It has not stopped the export-driven Japanese stock market from rallying its way strongly, and maybe if we have time, I'll look at the yen later. But what we're more interested in is the American markets, and what we can see is a couple of weeks ago we talked about these kind of real big sort of these bearish engulfing, bearish key reversal candles. They were all driven by Trump going out, putting on 100%, China tariff. But if you look at the last week or two, bang, you can see that these are basically, as people have watched Trump sort of row back from those kind of 100% tariff rows, that has basically just brought on that giddiness and shifted and pushed prices on indexes to once again to new all-time highs, which is quite something. Really, it's quite something. It's quite some move there that is happening there. And as I said, even though we've got a lot of earnings out this week, even though some of the price action on those companies looks like bearish patterns, the reality is that I think that we are in a risk on bull run, and I think that will only be accelerated by the interest rate cut on Wednesday evening. Even though most people have baked that in, but I think if they get that kind of US China deal done, then I think that kind of giddiness just drives everything higher and stuff, and that's what we look at there, okay. And I don't think there's any reason to sort of fight that, okay, until a base bump we know at the moment. If we look a bit closer to home, okay, here we've got DAX here, right? We've talked a lot about this. DAX is just, oops, excuse my drawing, but as I say every week, I'm a better trader than I am a artist. But you can see that that's what we're sort of just drifting sideways with. I was reading some interesting data on the over the weekend. Porsche announced a 95% drop in profits. There you go, from like 2.6 billion to I think like 90 million or something like that. Based upon the effect of tariffs, and also the effect that they went all in on EVs, and basically nobody's buying EVs, nobody wants them and stuff. But 95% drop in profits, for a major company like that is a shocker. But as you can see, the DAX, even though it's holding above the 20 period moving average, when we just look at those American indexes are pushing high, we looked at that Japanese index was pushing high. That German one is still, I wouldn't exactly say that's filling me with a lot of excitement, is it? Not exactly sort of launching us higher in that sense. And with that close to home, even the FTSE, all right, even the FTSE is kind of pushing its way higher there. Okay. And I think part of that is as we see elements of weakness in sterling, that helps the FTSE, because FTSE 100 is primarily, it's an international index more so than a representation of the UK, and of course the sort of the weaker sterling is the more the overseas profits, the better they can look. So that has an impact there. But you can see for yourself, all right. The daily chart, we had a really lovely pullback here, all right, about 7-8 days ago, pulled back to the 50 period moving average, bounced off it, morning starred off it, and have just not looked back from it. And we've just carried forward that that giddiness there. Looking at a couple of commodities, gold. All right, that kind of interesting. Gold has been the uncertainty trade, hasn't it? All right, gold has been the uncertainty trade, and you can see that it's powered up, and everybody's noticed it and seen it. But if we just look at the kind of last 2 weeks, is that a case of that? If US China deal gets done, is that a peak in gold? Certainly, when you go down to the daily chart, we had a really strong bearish candle, and we're holding above. Well, we're holding above 4,000, but I'd be interested to see if we close beneath the 20, because you have not done that since August. Okay. And if we go into the 4 hour chart, I mean, on the 4 hour chart, that is that's a classical picture perfect, beautiful double top there, isn't it? Absolutely beautiful. I keep saying that, opportunities, and trends and patterns, they should leap off the chart. You shouldn't have to be fighting them. And I wonder now whether we've got a double top, and I wonder whether we'll form a bit of a descending triangle with 4,000 as a base there. And I'll be intrigued to see, do we come back to 4,000? And if so, what happens? Do we find support there? Or does it actually break and go? Okay, so I think the more that we have that giddiness, and the more that kind of Trump and Z are positive, I think the more that has an impact on gold being bearish. That's the way I'd be looking at that on a short term. If you look at silver, I mean, silver to me, that is an evening star. Having rallied up to 50, I look at that as a kind of like an evening star formation on the weekly chart there. Wouldn't surprise me. I'm looking at, could it come back up and test 50 to form a lower high? That's what I'd like to see. But if you go down to the daily chart, if you look at that, it's now beneath the 20 period moving average, which it hasn't been beneath since August. Great run, ended with a bearish engulfing key reversal. Now it's beneath the 20. The 20 starting to roll over. I wonder if we could maybe not get up to 50, but maybe we sort of drift up to the sort of 20, and then basically use that to form a lower high before drifting to the 50. That's, if we stay bearish, that's what I'd be looking for on silver. Certainly on the 4 hour chart, you see how the silver's now beneath the 20 period moving average, and it's I think we're going to get coiled in here between the 20 and the 200 and drift our way. And then as we get into the central bankers commentary, that's what I'll be looking at in silver. People will be saying, well, actually, does that help Bitcoin? Because if in the same way the uncertainty has helped gold and silver, the kind of the certainty or the risk on kind of giddiness might well help Bitcoin. Okay, and it's certainly held above that 108 level. Go down to the daily chart. You might look at that, Paul, as a version of a very sloppy double bottom there. All right, on the 200 period, kind of 108 level, and we're now back up above the daily 50. Now, admittedly, we've been pivoting around that 50 for a couple of months, but you'd have to see is if everyone's getting giddy and risk on, does that help Bitcoin move its way forward? All right, so that was kind of indices and commodities. Let's have a look at dollar and sterling, depending upon how we're doing for time. So here we go. I'm going to just put these all up to a little bit higher time frames. Okay, this is a kind of a dollar chart. It was a bit of a quiet morning intraday trading the dollar this morning, and that might change this afternoon, of course. So this is a dollar profile I have. So it's a dollar profile. So I've got Aussie dollar on the weekly, Kiwi dollar on the weekly, Euro dollar on the weekly, dollar CAD, pound dollar, dollar yen, dollar Swiss, and dollar index. So I look at the FX markets. Okay, I'm always looking at starting with that dollar index, trying to get an understanding there. Dollar index weekly chart. I look at that as we've flipped the 20. The 20 was acting as bullish resistance. It's now acting as support there. Okay, it's flipped from resistance to support. We are coiling up there a bit. If you look at, the last couple of weeks have been inside bars, and it might well be that that is just in front of the FOMC on Wednesday. Daily chart isn't as not as pretty, but the way I'd look at it is that the price is above the 20, which is above the 50. So we are still in a kind of bullish sentiment, all right? And maybe that I would look at that. Here we go. Let's just draw in here. Bang. Okay, that's just a quick draw. But as I said, maybe this is just an indication of a coiling down around about 98.50 in front of FOMC, and that maybe some of the comments in FOMC from Mr. Powell might have something that is the catalyst to pump us in one direction or another. So, it's no surprise to see that particularly coiling up. All right, the way it's going. If you look at the flip side of that, euro dollar. I look at that as euro dollar. We made a false breakout there. Let's just draw this in. Give people a bit of sense of, we had a false breakout here. That was the last FOMC meeting. We're now beneath the 20. See how, it's the same inside bars, but we're beneath the 20. And I wonder if that 20 acts as dynamic resistance. I'd I'd be curious to see whether we get something out of the ECB and FOMC that supports that. Okay. I'd be looking at that kind of supporting line. That 20 does it basically coil its way up and drop out of that. Certainly, once again, that was on the daily chart, we are beneath the 50, price is beneath the 20. That kind of pull back into the 50 was a really nice reversal down. Okay, a little bit of a swing trade off that. But yeah, I wonder if we're just I think we're gonna coil up in front of Wednesday and Thursdays. Okay, don't be surprised if we're a little bit quiet and a little bit dull on that. Okay, in terms of the maneuvers about that. Let's have a look at let's finish with sterling. Okay, I don't want to overrun too much. Okay, so sterling, what have I got here? Sterling profile. So cable, euro sterling, pound Aussie, pound Canadian dollar, pound yen, pound Swiss, pound Kiwi, and FTSE. It's quite an interesting morning. Okay, this morning on intraday trading. Intraday trading of sterling. Okay, a couple of nice little moves, but you had to be Johnny on the spot. Okay, a couple of them were right out of the gate in the at the 8 a.m. open. But yeah, we have talked here about condols. All right, over the last sort of couple of weeks. Basically, sterling is weakened against Aussie. Weakened against Canadian dollar, even weakened against New Zealand dollar. Remember what I was saying, New Zealand dollar is basically bottom of the pile with pound yen, but we can see that sterling is weakened against that. Interestingly, what we got here, sort of end of last week into start on the pound. Aussie was gap down. That's kind of Aussie strength. That's kind of that relief rally. That's Aussie being used as a proxy for China. That's Aussie being a reflection of kind of risk on, and that's what we've seen, and that's what we've seen there. Okay. Same with pound against US dollar. All right, we have seen that sterling weaken. We have seen sterling strengthen against Japanese yen, but that's not really a shock because pretty much everybody else has strengthened against Japanese yen. Japanese yen has really been weak. And then pound against Swiss franc, okay, has kind of drifted lower as well. So hence why right at the start and looked at the STAM, it's no surprise that sterling's in the middle of the STAM pack, okay. It's just it's been held up a little bit by pound against yen, and also the last couple of days that it has the euro against the sterling has started to break out of that kind of miserable sort of, well, it's a miserable range on a daily chart if you're a trend trader. If you are an intraday trader, it's been glorious. But I do appreciate that, once again, we are waiting to see if we get any kind of real catalyst outside of those central bank comments this week. As I said, for sterling, I think sterling is probably a bit of a whipping boy for the next few weeks as we run into the budget. I don't think anybody's going to make any really big major calls or choices in front of what Reeves looks to deliver, and then we'll get an indication of where that's going to actually take sterling after that. Okay, then, ladies and gentlemen, let us draw it to a close there. I hope you found that useful. I hope that's given you a little bit of help and a little bit of insight. As I said, it is a big week this week, so make sure you're on top of the news flow. Make sure your analysis is on top of the order flow. Make sure that you are managing risk, okay? As always, I hope you have a fabulous trading week, and I look forward to speaking to you soon. Take care, and trade well, everybody. Cheers.